Hello, Warriors. How's everyone doing? Everyone ready for the NFP? Hi, Simon. Thank you. It's not as happy these days with what's going on all over the world. Hi, James, Michael Weissman. Hello, Bran. K-Man's here. Andrew's here. AJ's here. George and everyone else. Team, how's the team doing? I just wanted to start
Happy
off.
Jobs Day. Happy Friday
Okay,
too.
okay, that's a little more neutral. Uh, 200 day on TLT right there. So, hi, Andrew Heath. Just wanted to show, where it's going to stop. Um, I saw Peter Bookvar yesterday on CNBC, and he said the time to worry about everything is if we get weak data and it doesn't move rates lower, because that means there's, more or less supply problem. I'm thinking that's what he's saying. So anyway, we'll see what happens here. Think it's a big day across the market, and I wanted to bring up the yen with K-Man. Good morning, buddy. How are you?
Good morning, Dale. Good morning, everybody.
Don't you think it's a coincidence that this came out of Japan on the anniversary of Pearl Harbor? Was it
Whoops.
kind of, huh?
Whoops.
What's the
Uh,
whoops?
uh,
Huh?
I think it is a coincidence.
Yeah, okay. Anyway, it was for people that were long US dollar yen.
Yeah.
So we've held the 200-day. What do you do with it here? You wait for a bounce and
Here,
sell it? Yeah.
here, nothing, Dale.
Yeah.
There's been a few articles out, and a couple of sources were saying that the market misinterpreted Ueda's words, that it was just in response to a question in Senate, and that they are still worried about personal consumption, about wages and things, so that the market should not overreact. But the overreaction came, of course, we always know more after the fact, but apparently there was a lot of optionality kicking off in the 144.5, 145.5 zone,
Yeah.
and that sent the dollar yen to the lows then. But the same is going to be the case if that thing breaks back above 145.5, because then there's probably people needing to buy back. But
Yeah.
that is just for the why this oversized moves. Now, what to do with it here? Me personally, not a lot. I still think we are going to see crosses probably finding offers in yen pairs, but I really don't know about the dollar. Really, really, really don't know. This is one of those meetings where I have really very, very little imposition in dollars. I'm just ready to react.
And
Okay.
I wanted to and good morning, K-Man. We've had a lot of discussions in the ForexAnalytix community, Dale, regarding this. It just so happens that move happened while I was on the daily roundup show, and not all the times do we get 300 pip moves when I'm broadcasting live with our traders. But it was interesting. We got to navigate through the whole move. I aggressively got long on a bounce. I mean, when it dropped down to the I was down to the one. Let me look at the price. It was like 130 or 142 and change, and I found myself underwater like about 80 pips with a pretty sizable position, and then we bounced aggressively from there because I was long yen or short the New Zealand yen earlier that day and closed it out way too early. But yeah, it was a really aggressive move, and it was a very, very big liquidation. You could see just the way the markets were crossing. You couldn't get fills. It was a nice It was like a capitulation type of move. If you were actually watching because I was watching quotes on 3 different platforms at that moment, and it's worth noting that everything was crossed. Liquidity was not there. It felt like a stop move to me, or like as K-Man, you probably could talk a little bit about like a little bit of an option squeeze there. And then, obviously everything corrected itself. I think that it's now stunned some longer term yen bears. And and technically some damage has been done. So I'm actually looking to now buy yen or sell dollar yen on any type of rally based on technical reasons. I know there's a lot of pushback on, oh, the BOJ governor said that and you misinterpreted this. And I understand that as well. And understand the risk, because we've seen that happen over the last several months, or last year, excuse me, where you get a lot of pushback on rhetoric, and then next thing you know, you got the dollar yen trading higher as a result. But I'm going to technically be looking for levels to be a buyer of yen, or selling yen pairs now. So it was really good that we got to do that live. I found, Dale, those positions where you find yourself like, oh shit, I just gave away like 2 weeks worth of profits. Oh, there, it just came back. It was that day, like literally within 5 minutes of trading that liquidity trap. So yeah, it's crazy day.
Besides FX came in, are there any other knockoff effects from this carry trade, JGBs? Could this be, the first lightning strike?
JGB yields rose definitely on the back of it, and they are not giving it back. So there is a case, as I said, for yen to find bids on dips right now. Also, the market is speculating on what may happen in December, but I do tend to believe those sources as well. And it's still my base case that the Bank of Japan doesn't do anything this month, but Ueda better give some explanation on what he said earlier this week. So
it made the carry trade more expensive on the interest rate front and the currency front. Does that mean anything to you? I mean, it is the main carry, isn't it? Currency using carry trade still.
Yeah. I mean, the yen is still is still a carry trade, and I think the ultra long termers are not going to have given in already. Because if you look at the move really and I'm really saying the ultra long termers, right? Those who started to trade it at the start of the move back in half 2021. They are not yet giving up, I think, because we still above 140 in the dollar yen, and we're still only having retraced like I don't know, 23 or so, not even the 23% in some of the long-term yen crosses. But I do think that
just so I can, K-Man, if you don't mind if I just interrupt just 1 second, I just wanted to let you know that the 2023 move from low to high, we hit not only the 200 DMA yesterday in the dollar yen, but also the 38% retracement was at 142.53. That's why I was buying it yesterday, even though it dropped like another 80 pips or whatever. It was the 38% retracement of the entire move of this year. So just wanted to clarify that.
That's what I was going to come to. I see. If you look at the shorter or the more medium term, not the ultra long term, but the more medium term, they've probably been washed out on a part of their positions there now, or at least reduced their positions. But let's not forget, they also already started to reduce when the US yields were coming down, right? So it is my opinion. I've not verified it in the market. I will do it, but it is of my opinion that books will likely be a bit cleaner after this move there. But really, the bulk yesterday, when and the one that Blake also was talking about, that last move, pure option gamma. I think they really had to go. And since a lot is driven by machines now, they don't think whether it's a reasonable or not move. They just hit the next bid.
You know,
It's kind of like
though?
what happens when a lot of these brokers get squeezed with the S&P, is it's trapped in one, in those tight ranges, Dale, and then all of a sudden when you break away from the range, and as K-Man says, that these algorithms just have to buy. They don't give a shit what the price is. They just have to, from a risk management point of view, they have to take offers and bids out, and we could get that today, especially with the tight range that we've seen in the S&P over the last week and a half. So I'm very hopeful, and I'm very worried for some traders that we're going to get a lot of volatility today following the jobs report.
Yeah, it's very possible.
You know, it's interesting on this weekly. You see how last year when we made these new highs, I mean, the momentum was unbelievable, which, meant that wasn't going to be the high, even though we had this big break. And this time it didn't even get over 70.
So divergent on the month.
And the most bearish thing count you could come up with, there are these things in Elliott. I only know because I've been caught the wrong way in them and the right way, but where you get an A wave and you get a B that's an irregular that takes out a high. And this, and then you get a fib extension of this from here, we could be talking 122 in the end sometime next year.
Yeah, that's a hell of a monthly chart that you have there, Dale.
Yeah.
So
anyway, just a telescope on Friday.
Yeah, wild ass moves.
Yeah.
Hey, real quick.
Yeah.
We have about 20 minutes until we have NFP. Dow futures are trading at their lows of the session right now. But we're still in a really tight trading range in the S&P. Look at how tight that range is that you got there.
Yeah, the weekly 2-week reversal number on a close is 45.58. So
my friend Joe, he's in our community, Ripsters. He was telling me that Helene Meisler, and I try to follow Twitter. I probably spend like a couple % of my day looking through Twitter. And Helene, though, is one of those people that I love to follow. I love her experience. She's been in the markets probably about the same amount of time as you, her and her husband. And Dale, and she's awesome, and she has pointed out that let me read it to you. ISE call put ratio for equities over 2 for the 4th consecutive day. That means traders have been buying calls 4 days in a row, double the amount over puts. So that's crazy, right? And it's going into a day like today.
Yeah, they're set up to 44 and then 42. It's possible.
No,
like you were talking about.
No, they're set up for a breakout higher. They're buying calls.
Oh, they're buying calls.
Mm-hmm.
That's bullish, not contrarian.
It's bullish. 4 days in a row. Yeah. So the market's expecting an upside breakout here. So
okay, well, we'll see if it turns out to be a contrarian indicator.
Yeah, I mean, we'll see. I mean, just remember the market's positioned for a break higher. So and I mean, we're nudged up against 4,600. So we'll see.
Today's important for them.
Today is really important. I wanted to ask K-Man, because this has been my issue the whole time. And Dale, I'd love to have your comments here, and I can take the charts if you want me to. But I wanted to ask both of you guys, what are your thoughts here? Because I don't know, and I don't think we've had adequate evidence this week, because the ranges have been so tight, that if the data comes in weak, is the market going to cheer that? Like, let's say, because obviously that we're expecting 180,000 jobs, and you could factor in auto workers and some of the seasonal stuff. But if the data comes in really weak, like let's say we create 60,000 jobs or 80,000 jobs or something, or maybe we don't create any jobs, I don't know, does the market find that is being vindicated that they're pricing in rate cuts so rapidly, and then the market rallies on that? Or do people look at that and say, shit, here comes the recession, and it's going to come a little sooner than I thought. We need to sell stocks. What's your gut instincts, Dale? And then I'll ask K-Man too, and I'll grab the screen from here. So,
my gut instinct is, looks great, but I wouldn't be long up here. I mean, I actually bought some puts yesterday, so we'll see.
What do you think, K-Man?
Right. I'm sorry.
No problem.
Can I just reply to two questions in the chat room first?
Sure.
Quickly. So Patrick is asking whether we have any idea if this is intervention. There is absolutely no intervention from the MOF or Bank of Japan, Patrick, in this round. It's completely different stuff. We were not at extremes either on any of the yen pairs compared to the past week. So no, I 99.9% no intervention. And then AJ saying that he thinks CPI may be more important on Tuesday. In case it diverges a lot from expectations, it may be, but we have to realize that the jobs market is still one of those big dominoes still standing right now, even though we had a few signs of weakening here and there. But I guess if we really start to see bad reports, it will overshadow whatever may happen in the CPI later. That's just my opinion, but I think the jobs market is really important, very important going forward as well into 2024. So you were asking what I think for today. It's one of those days where I really have no dollar position at all, so to speak of, because of the importance of that jobs report. What I think, in case we need to make three distinctions, I reckon, whether it's good, a bit bad, or really bad, mild or really bad. So
how hot's the porridge?
there's but there's a bit of contradictory expectations as well, because there's been the resolvence of those strikes where people think it may have been in just the window for taking the data could have been just when those strikes were over. So more people coming back into the jobs market, so we could see an overshoot of the non-farm payrolls. That is one rumor that is flying around. But the one that I'm really going to look at now, of course, the NFP number, but also the unemployment number. Because if you get a 4 in front of that from 3.9, the market is psychologically going to think, well, that's not good. Even if it's still only 4.0, but imagine we get 4.1% on the unemployment rate, just below. Yeah, if you get 4.1% or so, then the dollar risks to get hit.
And you said dollar and risk to get hit, and I'd agree with that 100%. I mean, having a 4 handle, and just look at how low we've been for so long. We haven't seen 4% since. Yeah, I'm sorry. Go ahead.
Be sorry, Dale. Go ahead.
Yeah, no.
Okay, it'd still be very slow in the global picture, even if you get like 4.1, but the psychological barrier seems to be a bit 4% and stuff like that in that unemployment rate, and I think that may be actually your bigger driver today.
I can't disagree with that, and I actually agree wholeheartedly. So that this unemployment rate, big number, not only just the headline number. So because everybody's expecting a headline number to be decent, it's this number that might actually bring in some concern. Also, let me get rid of that. We also have, inflation, or the average hourly earnings we should be paying attention to from an inflation point of view, especially as CPI is coming up this next week as well. So a lot of things that we will be focused on going into today. I want to address which is a new trader in the community, said, good morning. You and I both responded to this, but I think it's worth mentioning here ahead of today's non-farm. Good morning, gents. Pretty new to ForexAnalytix, but was wondering if I can get opinions on the NFP and data if it comes in weak tonight. Would capital flows from the U.S. dollar into currencies with greater interest rates, pound or euro, and also negatively affect commodity currencies midterm due to risk off affect recession fears? Cheers. You can actually see my response here, and I do think that if the data comes in weak, I am, like I said, I think the dollar yen actually has the target on its back right now, and I do believe that any spike higher in the yen pairs are going to be sold. So whether you're talking about the euro yen or the pound yen, and that's why that if we get weak data and you see a rally in the euro, for example, I think it's going to be short-lived, and you just focus on the fact that the 200 DMA is around the 108.25, 108.30 level. So if we spike back up to yesterday's highs, I think you have to use that as an opportunity because people are going to start selling the euro yen, because the euro yen technically is broken now.
Yeah,
it is. Yeah, it's broken. So any rally should find sellers. And I think if the data is, especially like K-Man saying, it's really weak, then you're going to probably see yen strength through crosses too. You could probably say the same thing about the Aussie yen or the Kiwi yen. But I do think, and I want to show you one last currency, and this is kind of a gimme from, I talked about it on the trade-off, but talked about it here as well, or in our community yesterday. This is a Gartley pattern on the Euro Aussie. I think there's a lot of support around this weekly or daily 618 retracement. There's a lot of support down here around the 163 level, and so you can see we have a nice Gartley. So as long as we're trading above 163, we're not really breaking below that. I think the risk is that on a weak data, you're going to get a push higher here. So anyway, that was my response. K-Man, I know you have another response here. We don't have to read through it, but maybe you can talk through Az's question. Hello? Do we? Oh,
sorry, I was muted. Sorry about
that.
Sorry.
Go ahead.
No, that's why I'm also saying we need to make a bit of a distinction whether it's good, mildly bad, or very bad, right? I mean, those mild things that have been seen, they've been followed by kind of risk on. So that means the stock market's going up, and then you will probably see a bit more euro crosses under pressure to the downside, because usually when it's all mild, then you don't need euro or dollar to as a safe haven also. But then we could see stuff like euro CAD, or because oil's trying to put in a little bit of a bounce, come under further pressure. But if it's really, really bad, then you look at stuff like euro yen, euro Swiss, things like that, right? And if it's really, really, really good, then I reckon euro dollar is toast through that.
I'd just like to mention that the Nikkei didn't like what happened to the yen yesterday,
because
we were almost at new highs.
Because it did put a lot of pressure on the car makers and on the big machinery.
And this was the strongest market last year, and look how much weaker it is than the S&Ps right now. I don't think you could ignore the Nikkei, because that fed the bullish fever last year. And gosh, if we ever get under that bottom line you have there, Blake, that's a big problem.
Yeah, and you can see the 200 DMA, kind of moving up with right towards the bigger, longer term breakout points here, and you make a great point. Technically, we're not making new highs. You take the German DAX and you're like, what the hell is the German DAX doing up here? I don't know, but then you have Nikkei. You're right; it does look vulnerable now.
That's why I brought it up, because
there
are knock-on effects from what happened this week on December 7th.
Yeah, 100%. Hey, we have just a couple more minutes, and Dale, I want to get your thoughts here on precious metals. And K-Man, I know you've been trading against this 2010 level, so I want to hear your opinion here. I mean, obviously, this is going to be a NFP play, because in my opinion, if we have weak data, and you know, you see the dollar weekend. Gold should shine. God, I hate using that that saying,
Nice
but
one.
gold should look better, right? If you have weak data, you should see gold spike up a little bit.
Gold
But
should have rallied with the yen collapse, U.S. dollar yen collapse yesterday too.
yeah, I'm surprised it didn't do anything.
Yeah,
Just
and rates
nothing.
didn't do much either.
Yeah, I know. It was all just yen, and but you
Yeah,
can see a little failure here in silver. But anyway, so Dale, what are your thoughts about gold?
you know, we could rally for a B, but I believe that we're going to see like 1920, 1910 in the weeks ahead, and then back down there, and that'll be where I'm going to be interested in. Silver maybe like 23, 22 and a half.
So came in. I took my dollar positions off just a little while ago. My last one was, you know, short sterling, and I just took it off ahead of NFP because I don't want any dollar positions. And obviously, gold's going to be a big mover today. You have any thoughts here?
Yes, we were talking about that with Gregor on the Flow Show this morning as well. You know, I played it just for a bit of a recovery, and I'm out of it right now because you know there's going to be two things. Yes, gold will fly on a weakened number, especially if yields continue to tank. But I really want to see if we get back up to 2070s, what's going to happen there, because if there would be really a lot of buying going on, once that spike was done, people getting out, people frustrated of getting pulled into wrong positions, wanting to get out. I think that was caused that drop. But if you don't see any real buyers stepping in and keeping gold up towards the close of the week, I think we should perhaps look at the other side as well. And that level of 2010, call it 2000 as well. If that goes, there could be a round of liquidation there.
Got it. All right. Well, yeah.
But I'm neutral right now.
Yeah. Okay. And it makes
I'm
sense.
strongly neutral.
Yeah, I'm sorry.
Well, that's
I'm
a
with you
position.
guys. I'm strongly neutral, but I might not be that way in 3.5 minutes from now. So let's set up for today. Now, I do want to mention, if you guys are not listening to the Flow Show, make sure you listen to that. If you're in European hours, Ryan is out today. What a day to take the day off, huh? I don't know, I'm telling you. But K-Man, thanks for stepping in with Grega today. You know, getting an Elliott Wave point of view and having K-Man there is always awesome. So make sure you guys are listening to that in the European hours if you're not already. I'm going to move this data flash over, and let's get ready for the data. So over here on the left, I think I'm just going to put in. We have yields over to the right. We have S&P.
Dollar yen.
Yeah, I think we have to put dollar yen because of the activity that we've seen the last 24 hours. Because I want to trade it. So I think from a selfish point of view, not only should we put the dollar yen, even though it's going to be almost you would think a mirror image of the of yields, or you know, but I don't know. We've seen yields and the dollar kind of break ranks this week, so it's going to be interesting to watch. So there's the dollar yen to the left, S&P right in the middle. 10-year yields right over here onto the right. They're all 15-minute charts. You have the jobs report right through here, all of the you know evidence, or all the data coming up, and you can get that on ForexAnalytix. This is going to pop up as the data comes out in literally 1 minute from right now. So Dale, any last minute thoughts here?
No, not really. I watch that Friday close 45.58. If we close bad, I think the correction will start into Christmas. I don't think we'll get a Santa rally.
Yeah, Santa rally might come after Christmas, which does happen.
We had it. We had it in.
We had it in November. Yeah, that's right. K-Man, last minute thoughts here.
Yeah, very good numbers. I think euro dollar lower. Mildly bad numbers. I think Aussie dollar is fine.
There, I actually agree with that assessment as well. Bad number. I'm going to be watching that dollar yen, obviously to the left here. And
Canada is so weak. USD CAD is so weak.
Yeah, and you know, well, and especially with weak crude, you would think that the dollar CAD would have been
here we go.
higher. Here we go. Good data.
199, 3.7 unemployment rate.
3.7. Holy cow. Oh, I got triggered a little dollar yen. I don't know if I really want that short. Oops.
So that is maybe some dot plots go away. People were pretty aggressive about the tightening. This is what I was looking for, was some disappointment on the interest rate front. So what the bonds? Okay, yeah, yields are rising a little bit.
Yeah,
Okay,
yields are jumping a bit there.
Yeah.
4 on the 10s.
yeah.
That's
And
also
you
euro
can,
dollar.
yeah, you can see dollar yen spiking up. Euro's getting
Watch above
crushed.
145.5 on that dollar yen.
Yeah, let's see if we can. Let's see how we react up here.
To take gold down and dollar up. Yeah, dollar up pretty good.
Dollar's up pretty good. Yields are up. Look at yields just breaking away here.
Yeah.
Wow. And stocks are really under pressure. Let's go over to gold.
So we get that pullback in TLT. From the 200-day.
That's a hell of a little head and shoulder pattern there. In gold setting up, but gold hasn't broken yet.
No, it's not.
It really hasn't. So you got to be a little careful with this one. Excuse me, guys.
Let me promote Jamie. Let's talk to someone who knows almost as much as we do. I'm kidding. He knows more. Can you promote Jamie for me, Blake? It's
absolutely. I'm going to do that right now, and let me grab him really quick. Guys, dollar yen's just slipped back below 145. Not a huge response there. It's actually coming off now. So on that good data, yen's the yen pairs are actually finding a little bit of selling.
So we're right at that 458 level. So think about it, Blake. Everyone got real long, and so far Helene's thing is a contrary indicator. But everyone got long to have the right stocks on their books into the end of the year. Can you imagine what they're going to do if we start heading towards 43, 4,200 going into the end of the year?
Yeah, I mean, you're going to have it again. It's you got everybody that chased the market FOMO wise, right?
You talked about this,
yes, I talked about it quite extensively on the week ahead video. And by the way, that's right up to the 618 on the dollar yen. So it's going to keep me short. But as far as stocks go, yeah, that's the problem that most macroeconomists have been bearish all year. And so, of course, if you're listening to your macroeconomists that you pay for, hundreds of thousands of dollars a year, and you're paying this firm to tell you that the shit's going to hit the fan, and you're like, okay, well, I'm going to pussyfoot it. And, around all of 2023, yet the market's up nearly 20%. You're chasing. And you've been chasing the last month. And now if the market goes tits up, now you got a serious problem, because you not only underperform the market to the upside, but then it's going to smack you on the downside. And then you're going to end up at the end of the year up 5%, where the S&P maybe is up 15. So that's the big risk, I think, going into December. But let's see proof in the market. And this 45.35, you can see that red line right there. That's where the S&P, as long as we're above that, I wouldn't get too, carried away with short risk. So,
okay.
Yeah.
Well, what a great week, team. You guys are the best.
Well, Dale, thanks for guiding us. And I want to say, K-Man, thank you for being here every day. I know you haven't been feeling well this week, and you even stepped in for Ryan today with Grega. So thank you guys for being here as well.
Cheers, guys.
What a trooper K-Man is.
Seriously.
All right, dude.
Collapse.
So my trading warrior brothers, Blake and K-Man, have a great weekend. You guys deserve it. Good luck the rest of the day. I'm sure you'll pull some pips out of the market, as Ryan calls. He's out spending his beer pips that he may have made over the phone. And anyway, guys, thank you for doing a great job for our community, not just in F.A.C.E, but all day long. Okay. You're really training a lot of people and teaching them how to fish so that when you guys are retired on your private island, they'll go, I remember Blake teaching me this and K-Man talking about this. So, what you're doing is really planting seeds for people's future careers. It's really a nice mission. Anyway, have a great weekend, you guys. And now I'm going to invite Jamie to talk to me. And Jamie, what a great day to have you. Welcome back to F.A.C.E.
Hey, good morning, Dale. How are you?
How are you, buddy?
I'm good, thanks. I'm good. Listen, I just have to say one thing. I know it's Friday and I know it's Christmas and festive season, but to say that I know more than you guys about these markets is, let's just say, very generous spirit.
Plenty. So
Have you been drinking
anyway,
already?
anyway, your initial reaction to what just happened here?
Well, I mean, as you guys were saying, it's the 3.7% and unemployment rate is the big one. I mean, the headline NFP number in itself, come see, come sa, if it's 180, 190, 200, that makes no difference really. But that unemployment rate is quite the thing. And well, you've seen the reaction in the yields especially. And I'm just wondering, like you all are, I'm sure, is what it does to Fed thinking into next week. I mean, I think I caught you guys just at this about 10, 15 minutes ago. Were you guys talking about the SAM rule, on the unemployment rate? Which is, as you know, if I think if it's half a percentage point higher than the average of the low over the last 12 months, then the SAM rule kicks in, and that's a reliable recession indicator. However, I mean, I think we were expecting 4% or higher for that rule to kick in now. It's gone the other way, so that if you take the SAM rule for what it's worth, and you're a follower of that, then that pushes the slowdown, the recession further into the distance, and and we've seen the reaction here.
So how about what happened on December 7th with the yen? That it was a misinterpreted statement. What kind of effects this can have with it being the carry trade? What were your thoughts when you saw that huge outside move in the yen yesterday, Jamie?
Well, I'll be quite frank. I wasn't quite sure what whoever said that triggered such a move. I mean, I've read what he said, certainly on the Reuters coverage. I know there were some other BOJ officials in the week sort of giving a steer as well. But to be honest, I'm not quite sure the move, or I'm not quite sure what was said merited the move. I mean, it was remarkable. Some of the moves in JGBs as well. I think the 5-year yield had one of its biggest rises in a decade. The yen obviously, went to the moon. I think it's safe to say that these moves are slightly exaggerated.
But why? Why are they exaggerated?
Well,
is it the market structure? Is there really, like I heard from the guys today, that the market wasn't that efficient with this going on, as far as fills and where things were.
Right.
I mean, we have market structure issues in every market that's out there when there's, air pockets like this?
Are you talking about sort of air pockets of illiquidity and deals not being able to get done? You may be right, but it wasn't as if he was speaking if these moves were done, in that twilight zone between, Wellington and San Francisco. It wasn't in those hours, was it? So I'm
not sure. This was
what? Okay. Well, that might explain it.